For a greater inheritance and estate, why the IRA or 401k or a tax deferred account is one of the worst account types to leave to that surviving spouse or leave to your heirs. So we don't realize on here, but when you pass away and someone gets that inherited IRA type of account, they themselves still have to pay taxes on those withdrawals that do occur. However, if you leave someone that non-qualified or that non-retirement type of account, they get what's called a step up in basis. Example, maybe you had $1 million basis, the account grew to $2 million unrealized gains. Well, now when you pass away, that surviving spouse or those heirs like your kids on there, they get a step up in basis of $2 million. So if they were to sell that $2 million on there, there'd be zero tax to them. The other account type to consider is the inherited Roth IRA. When that spouse or those surviving children on there receive an inherited Roth IRA and that money is taken out on qualified withdrawals, there is no tax on that either. So if you're trying to leave a greater estate, a greater legacy, and a greater inheritance, then having a 401k or an IRA as opposed to that non-qualified account for its step-up basis, or as opposed to the inherited Roth IRA account, it's one of the worst accounts out of all three types to leave for those purposes.